Hello and welcome to the third part of this employment law webinar. My name is Ian McRae. I head up the employment law team here at Field Seymour Parks, and this is the third part of a three-part series preparing you for the year ahead from an employment law perspective. So the first thing I'm going to talk about in this section is tax on termination payments. So those payments that are made to employees as and when their employment comes to an end. Now, firstly, you are hopefully all familiar with the changes that took place 6th of April 2018, which essentially tried to ensure that however you phrased it and however you paid things, that employees always received their notice pay and that they were always taxed upon it. So that happened in 2018. Now, there were some further changes due for April of this year, 2019, that have now been delayed until April 2020. But I still raise them so that you're aware of them now. And essentially the changes are that any termination payments that are over £30,000 will, from April 2020, be subject to employers' national insurance contributions, which they are not currently. Currently, it is only tax that is deducted on sums over £30,000. So from April 2020, those employer national insurance contributions are going to have to come off the excess as well. Another development this year, so 6th of April 2019, is payslips for workers. So a slight tweak here that you need to be aware of for your payroll is essentially you need to state the number of hours for which payment is being made when wages or salary varies by reference to time worked. So if you're paying on an hourly rate, you need to be clear as to the number of hours that that sum relates to, so that it's broken down. The other thing you need to be aware of is if you pay different rates for different types of work, for example, night working getting an increased amount, or particular shift payments, then going to need to be broken up on the pay slip as well, so that there is complete visibility essentially on how that payment has been calculated and how many hours of work it relates to. Now, the other element that I want to talk about in this section is some potential changes ahead relating to off-roll payroll working rules, most commonly known as IR35. Now, this is old news really. IR35 was introduced in the year 2000. And for those of you who aren't aware of it, the purpose behind it was essentially trying to ensure that those who work for a personal service company who would have been employed had it not been for that company, i.e. if they'd been engaged directly, pay broadly the same employment taxes as an employee. So if there is a personal service company and you would have been an employee was it not for that company, then potentially IR35 catches you and increases ultimately your potential tax liability. Now, there have been various problems with this since the year 2000. Not only the fact that sometimes it's difficult to determine whether or not the rules apply, but also because HM Revenue and Customs currently calculates that only 10% of personal service companies are getting this and these rules correct and paying the tax that they should be. Now, the reason for these new changes is ultimately that. And we've already seen some changes in the public sector in April 2017. So what they did in 2017 is they switched the burden of this IR35 onto sort of the end client. So in this case, onto sort of the public authorities. And what they said is it is now that public authorities' role to determine whether or not those IR35 rules apply. And if they do apply, then they potentially need to make those deductions at source. Now, that was the public sector in 2017. In the autumn 2018 budget, it was indicated that there is a plan to roll this out to the private sector. So unless you are a small business within the meaning of the Companies Act, the plan is that you will have and assume the same obligations as have been applied to the public sector. So namely, the end user of those services will have to determine whether the IR35 rules apply, and if they do, potentially making deductions. Now, The implications of this, we have to wait and see. I suspect there will be some challenge to the proposals, and we'll see how the government reacts to those. But a word of caution, when this was introduced into the public sector, a number of public authorities took a relatively risk-adverse approach to this. And some of them said, ultimately, for these contractors via a personal service company, they either said, you need to come on payroll, or alternative, they insisted that they only be instructed by an umbrella company. An umbrella company, for those of you who are not familiar with it, ensures that the money is taken out through salary from that company rather than as dividends, which is where the personal service company issue arises. Now, we have to wait and see whether the private sector reacts in the same way as the public sector and whether the government seeks to lessen the impact of these potential changes, but it is something to be aware of. When you have self-employed consultants who are operating through a company, you need to be aware that there may be some challenge to those arrangements coming up. So the final aspect I want to talk about is the Parental Bereavement Bill. So this was passed in September 2018, and again, this is another one of these changes that is expected to come in 2020. And essentially what it provides is there will be a statutory right to 2 weeks leave if you lose a child under the age of 18 or that you suffer a stillbirth from 24 weeks of pregnancy. Now for those 2 weeks leave, you'll be entitled to statutory pay, so the same right as you might get during a period of paternity leave. And there currently is an expectation there'll be a need to take the leave within 56 days of the child's death. Waiting final confirmation of how this will play out, but something again to be aware of for 2020 and that would need to be reflected in your various sort of family-friendly policies. So that brings us to the end of our sort of 2019 and what you need to be aware of for the years ahead. Usual caveat applies, only a very brief introductory summary. Please do take legal advice on your own specific circumstances. If you would like any of our updates to ensure that you remain abreast of any changes over the forthcoming year, then please do just drop me a line and we can organise that for you. And finally, if you have any questions on any of these sessions, then please do let me know. And if you've jumped straight into part 3, by all means, please do check out part 1 and part 2 of this series, which are available on our website or our YouTube channel.